What are closing costs for buyers? When you're buying a home, you need more than just the down payment to close a real estate transaction. Closing costs are a one-time expense that the buyer has to pay upfront in addition to the down payment. They cannot be rolled into the monthly mortgage payment. You should work closely with your real estate agent to figure out all the closing costs that you're going to be paying upfront early on in the process, so that you can set a realistic budget for your next home purchase and avoid any last-minute surprises. So let's start with the required expenses. So first up is the land transfer tax. In Ontario, the land transfer tax is paid to the provincial government for each real estate transaction. To get an idea, the land transfer tax is $16,475 for $1 million property. If you live in Toronto, you're approximately paying a double of that amount because you also have to pay the city. If all the buyers are first-time home buyers, the government gives a tax rebate of $4,000 if the property is outside of Toronto but within Ontario. If it's within Toronto, you get a tax rebate of $8,475. Number 2 is the lawyer or legal fees. You must hire a real estate lawyer to buy a home in Ontario. They review the agreement of purchase and sale, provide legal advice, and execute the real estate transaction. Expect to pay a real estate lawyer $500 to $2,000 per transaction. The exact amount depends on the complexity of the transaction. On top of the flat fee, the lawyer also charges you multiple disbursements. These disbursements are standard costs for carrying out real estate transactions. Example of disbursement costs include title searches, title insurance, registration fees, office expenses, courier costs, and more. These can add up somewhere between $1,000 to $2,000. Make sure that you sit down with your real estate lawyer early on in the process and have a conversation about these expenses. Statement of adjustments. The lawyer calculates all the housing expenses that the seller has prepaid ahead of time and that the buyer owes to the seller to close the transaction. The seller may have prepaid the remainder of the year's condo fees, property tax, utility fees, rent, rental charges, and so on. The exact amount is determined by the lawyer on a case-to-case basis and is prorated based on the closing date. So now that we have covered all the mandatory closing costs, let's talk about the ones that are situational. Sometimes they apply and sometimes they don't, and some of them can be optional. Don't worry, your real estate agent will help you figure all of this out. The most common one is home inspection. You're paying a professional home inspector anywhere from $200 to $500 to catch any hidden issues within the home that can cost you thousands of dollars after closing. It also helps you decide whether you want to go ahead with this transaction or not, or whether you want to renegotiate the purchase price. Another one is the home appraisal fee. The mortgage lender arranges a property appraiser to confirm whether the purchase price is reasonable for the current market. This usually costs anywhere from $300 to $500, and the lender may or may not pay for it. One rare expense for the buyer is the property survey. The survey shows the property boundaries of the land that you're purchasing, and it helps avoid disputes. And it helps the buyer plan for changes that they're going to make on the property, like building a new deck. The seller has to provide the survey if it's mentioned in the agreement. If the seller is not able to provide the survey, the buyer should think about the cost of acquiring an existing survey from the city. Also, there is the title insurance. Title describes the legal ownership of the property, and title insurance is a one-time premium that you can pay that protects the buyer from any disputes that arise in this matter. So title insurance costs a few $100s. So title insurance is optional, but it may be required by the lender, and you should talk with your real estate lawyer as this is one of their disbursements. If you're getting a condominium, it is highly recommended that you get a status certificate, or also known as a estoppel certificate. And this can be negotiated with the seller, or the seller might provide it upfront. If you're using a private lender, expect to pay lender fees, which can range from 1% to 3% of the total mortgage amount. You would get private financing if you're unable to secure financing from a bank for whatever reason. Also, you would be paying a higher interest rate. If your down payment is less than 20%, you're going to have to get a mortgage loan insurance to protect the lender. This could be paid upfront, or it could be added to your monthly mortgage payment, which is usually much more expensive. If any of the buyers are not residents of Canada, you are going to be paying the NRST, the non-resident speculation tax, which is 20% of the purchase price. If you purchase a pre-construction, you are expected to pay 13% of the purchase price in GST and HST. You will get some money back through a government rebate if that property is your primary residence. Talk to an accountant or a lawyer on how this would apply to your situation and read about it more on the CRA's website. Now that was a big list of closing costs, wasn't it? Typically, the closing costs are around 2%, but it can vary drastically with your unique situation. It is important for you to know as a buyer that these costs exist and that you should work with a professional well before you need to purchase a property and for you to budget accordingly. If you found this video helpful, please hit the like button. In the comment section below, tell me the most important thing you learned about closing costs. And subscribe to my channel if you want more content like this. Email me at raj@rajful.com if you want to chat with me about your unique situation and if you need a second opinion. Thanks for watching.